Backtesting is one of the best ways to test to see if you have a viable trading strategy or not. But if you do backtesting incorrectly, you're not going to get the full benefit of it. So in this video, I'll go over 19 common mistakes that beginners make when they start backtesting and how to solve them. First common mistake is that traders don't have a written trading plan in front of them while they're backtesting. So you can get something off the internet. I have one on my website you can have for free, wherever, it doesn't matter. But write down the rules of your trading strategy. Write down all of the things that are going to come into play, like the entry, the exit, trade management, risk, where you're going to place your stop losses, where you're going to take profits, where you're going to add to your position or where you're going to take off your position, stuff like that. So make sure that it's clear before you start the test so there's no confusion while you're testing. Second common mistake is people don't like to be wrong for some reason. A certain type of trader goes into the back test and they want to be like 100% correct when they're back testing. And obviously that's not possible. And that's actually detrimental to figuring out if the strategy is good or not. So be honest with your testing. Try to enter and exit as you would in real life market conditions, and you'll have much better data that way. Number 3, some traders don't test for long enough or have enough backtesting trades to prove that the system actually works or it has an edge. I see a lot of times where traders will test something for like 6 months on the daily chart and they'll say, oh yeah, this was like, there were 3 out of 4 winners and this is a profitable trading strategy. Well, how did it perform, before that and after that? Maybe it didn't work at all. So get as much data as you can and do as much testing as you can. And that will give you a better picture of if this strategy has an edge or not. The fourth big mistake is testing something once, even though you did a complete test with all of the data, you do it once and maybe you weren't in the right state of mind or you were tired or you just had a hard day and you weren't at your best when you were testing it. So I would recommend testing it maybe 2 or 3 times during different times of the day, different days, and that will give you a better idea of how that system performs based on your current performance, your current emotional state, and how you're feeling today. Because you might have a bad day and you have a bad round of backtesting, but then you get some sleep, you get some rest, and you're happier the next day, and you do the same test, and it might come out much differently. So keep that in mind. Number 5, a lot of people quit really quickly if they are not getting the results that they want. And this can be a good thing also, but if you want to really figure out how a system works or how well it performs, you should test it to the point where you get enough trades to say, okay, this is not working or this is working. So a lot of times people will test maybe 3 or 4 trades and then those are all losers and they're like, oh, the system doesn't work. But maybe that's just how the system goes. Maybe there are losing streaks of 4 or 5, 6 trades, and then the rest of the winning trades make up for those losses. So be sure to test, be sure not to give up too early. And if you can, like on the daily chart, test until the end of your data so that you get as much information as possible. Number 6 is a really common one, and I've done this before also. It's changing the system in the middle of the test. So let's say that you're testing moving averages, and then all of a sudden in the middle you say, oh, what happens if I add an RSI, right? And that's why the trading plan is so important, because you want to write down everything and test from beginning to end with this plan. If you start changing things in the middle, then you're changing the dynamics of the strategy, and it's not a good test. So test it to the end, and if you have an idea, write it down on your testing sheet. And then on the next test, do a full test with that idea plus your other idea. And that can give you much more data and it'll be clean because you're using the same strategy from beginning to end. Number 7, not following the system. So if you've written the system down, follow it. Some people try to put in their own input and they think that they know better. But what you're testing here is a system. You're not testing your intuition. Right? So you want to follow the rules, don't think you know better, and don't interfere with the trades as they're written in your trading plan. Number 8 is a big one. You should analyze your results after the backtest. And it's not just about the win rate and the return. You should look at other things like the drawdown. You should look at how many consecutive losers there are in a row. And that's important in live trading because if you know that number, let's say you have like 6 losing trades in a row in your backtesting, and you hit 6 in your live trading, you're like, okay, that's not a big deal because that's, I've seen that before, and that's just how the system works. However, if you hit 6 and you didn't have that background information with the backtest, then you're going to be like, oh no, is this system broken? Should I stop trading it? And it introduces all of that doubt into your mind and could stop you from trading that system. All right, so number 9 is where the rubber meets the road. You backtested a system, you got your stats, you know that it has an edge. Now you put it into live trading and you expect live trading to be exactly the same as your backtesting. And it's not going to be exactly the same, right? There's going to be periods of up and downs. Maybe you had a really good backtesting session, but you're coming into live trading at maybe the worst drawdown point of that system. So it's going to look bad in the beginning, but it's going to come back out. So don't expect the exact same results. It should be similar, obviously. And if your numbers are way different, then you should go back and figure out, why am I having such a big difference in live trading versus backtesting? But if it's a little bit off, that's okay. It's expected, and just move forward with it. Number 10, not considering portfolio risk. This is a big mistake because a lot of times people will test, for example, Forex pairs individually, but not consider what would happen if they traded, 5, 6, 10 pairs at the same time. So what if you're trading 10 pairs and 3 of them fire off a entry signal? Are you going to take all 3 of them, or are you going to cut back your risk? Are you only going to take the one that you think is the best? And so what's your strategy there? What's your portfolio risk? What's your correlation risk? And how are you going to handle that? And that's up to you. That's an individual thing. You have to figure that out through backtesting. You have to figure that out in relation to your risk tolerance. This is not something that anyone can tell you. So just be aware of that and test for that also. All right, this one is something that I'm sure everybody's done in the past. I've done this in the past also. Number 11 is testing a trading strategy on one stock or one currency pair or one futures contract or whatever, and then assuming that it'll work for all of them, right? In all markets. This is a universal strategy. And I haven't seen any strategies that are universal. There's going to be strategies for certain markets, strategies for certain times of the year. And you really have to hone in on what's the best strategy for the market that you're trading, because like people, markets have personalities, and the best trading strategy for that market might not be the best trading strategy in another market. So don't make that assumption. I've seen people do that and they've blown out a lot of money. So on top of that, also, some educators out there are going to tell you that this is the case, right? This works in any market. Well, maybe not. So don't take their word for it. Backtest it yourself and figure out if this is true or not. The 12th common mistake is not paying attention when you're backtesting. So treat this like live trading, treat this like a job, and pay attention. In the past, sometimes I would listen to music or I would watch a movie on the side. And then if you do that, you're obviously not giving the backtesting 100% focus and the time that you need to really hone your skills. So turn off everything else, turn off your phone, turn off everything else that does not relate to the backtesting, and just backtest. Number 13, hitting the backspace to go backwards on the chart so that you can have the optimal entry and not the entry that you would probably take in live trading. And there are pluses and minuses to doing both. If you do optimal entry, you can test out the performance if there's an optimal entry. But the better way to do it usually is to look at it and say, okay, this is where I would enter right now, not being able to see the rest of the chart. Because if you move forward and you see the rest of the chart, you're going to have some bias based on what you've seen, right? But if you only see this part of the chart, then you should make your decisions based on that, because that's how you're going to make your decisions when you're trading. Now we get more into the experimental phase and figuring things out for yourself. So number 14 is only following other people's rules or other people's trading strategies and not trying to figure things out for yourself. So it's great to start with other people's stuff. no doubt, if you know that they're successful and they have a successful strategy that's working for them, great. That's a great jumping off point. But all of the successful traders that I've talked to have never really used a strategy right out of the box from somebody else. They've always had to tailor it and custom design it for their own personality and their risk tolerance. And you're going to have to do the same thing. So don't just take things at face value. Be willing to experiment, be willing to customize, and you'll have a better trading strategy for that. Number 15, a lot of traders throw out a perfectly good trading strategy if it doesn't make like an X amount of money every month. So this could be a percentage, this could be a dollar amount. But the reality is that if you have a strategy that's profitable, then there can be ways to tweak the exit or tweak the entry to make more money with that strategy. If it's profitable over time, that's a huge place to start. That's fantastic. You can always tweak the exits and stuff like that. But if it's not profitable over time, the entry is not profitable, then you're probably dealing with a trading strategy that's not going to work. So don't throw out a perfectly good profitable strategy just because it's not meeting your whatever, like 20% a month goal, which is, might be a little outrageous anyway. So remember that you can stack multiple strategies, you can stack multiple markets, and that can give you the cumulative return that you're looking for. And just don't get too discouraged when you only see a small return on one of those markets. Number 16 is a big one. People try to over-optimize a trading strategy. So let's say that it's profitable on the first run, but they start adding other indicators and other methods of analysis to so-called optimize the strategy, right? And what's really going on here is people want to create perfection. They want the perfect entry so that you have like a 99% win rate, and that's not possible. So really refrain from adding too many things to your trading strategy. The best strategies I've seen are very simple, and they are very robust. They're not trying to be perfect, but over time they have a good return, and that's the main thing that you're looking for. This is an interesting one. Number 17 is trying to be a automated trader when you should really be a manual discretionary trader, and vice versa. A lot of people like the idea of so-called taking emotions out of trading by using automated systems. And there is that to a degree. However, there are still emotions involved, right? With automated trading, you have to decide to turn it on, turn it off. You have to know when the strategy is working and when it's not working. And that takes a certain skill set that I think a lot of people don't have. It's this very technical, very numbers-driven skill set. And I personally believe that a lot of people would be better off starting out as discretionary traders and then figuring out what works and then having somebody build the automated system based on that. But there are people who are super good at automation right off the bat. So if that's you, then you shouldn't maybe mess around with the discretionary stuff, and you should start to build these automated systems that are based on numbers and set rules. So figure out what's best for you, what do you like, and that will give you a better chance of success. All right, we're almost to the end here. Number 18 is not understanding the trading strategy that you are backtesting. And this may seem really simple, but I've done this in the past where I've taken a course or I've taken somebody's notes and they have this strategy and I put it on the chart. And they say it's a really good strategy. I put it in backtesting and it's terrible. And then I just write it off and I don't look at it again. But the mistake that I've made in the past was not going back to the original rules and double checking if I understood them or not. So that's something that you should really do. If you have a really bad test, make sure that you understood the strategy correctly. Make sure that you're putting in the right indicators, you have the right entries and exits, and there aren't some nuances that you're missing in that strategy. All right, the number 19 mistake that a lot of traders make when backtesting is they have a preset bias coming in and they let that bias affect the backtest. So for example, let's say that you have a preset bias that says breakout trading is always going to fail. Breakouts are going to fail, right? So in the backtesting, you could be short-circuiting those breakout trades, maybe closing them out early before they really have a chance to run. So make sure that you're not bringing your biases into the backtest. And again, that really comes back to the trading plan, right? Follow the trading plan, write it down, make it super concise, and that will help you get the best information out of your backtest. All right, those are the most common mistakes that beginners make when backtesting. If you have any questions, leave them below. If you have any other input that you want to share about backtesting or any other mistakes that you've made, share them in the comments below. Also, if you really like this video, subscribe, hit the bell to get notifications so you can get more videos like this. Thanks for watching and have a great day.